Welcome to Tesla Stock Daily Drive, where we navigate the twists and turns of financial markets with a spotlight on Tesla. I'm your host, Dusty, and today we're unpacking the market movements from June 22, 2025, and what they mean for your investments. As investors catch their breath after a weekend of geopolitical tension, the focus has shifted to U.S. strikes on Iranian nuclear facilities. Events like these push investors towards safer assets, and, naturally, we might see some ripple effects on stocks and cryptocurrencies. Oil prices, meanwhile, seem poised for an uptick, creating quite a stir in the market atmosphere. This week promises to be an economic nail-biter, with key updates on the agenda. Federal Reserve Chair Jerome Powell's testimony to Congress will likely steal the spotlight, along with the May personal consumption expenditures report, a key measure of inflation for the Fed. Stay tuned as we also anticipate news on existing home sales, consumer confidence, and GDP figures for the first quarter. Retail sales data earlier in the week hinted at a dip of around 0.6%. Add to this the leading economic indicators report expected to reveal a contraction of the same magnitude, and we have a recipe for speculation about what's ahead. Even though the Federal Reserve is holding steady on interest rates, there's a whisper of a possible hike floating through the financial corridors. Globally, all eyes are on flash PMIs for major economies. While the Eurozone hopes for a manufacturing reprieve, China is diving into discussions around anti-competition laws and U.S. tariffs. Turning the spotlight on Tesla, Sunday, June 22nd, wrapped up with Tesla shares closing at $322.16. While there's no trading activity that day, the numbers from Friday suggested the usual roller coaster, with a high of $332.36 and a dip to $317.78 before market close. Keep in mind, the trading landscape might have been unusual since the 22nd was a Sunday, casting some shadows on the data. Tesla's financial journey in 2025 has been anything but smooth. The first quarter saw total revenues hit $19.34 billion, marking a 9% decline from last year. Particularly striking was the 70.58% drop in profit after tax, landing at just 41 cents billion. Over the past month, Tesla has weathered a negative 7.52% return, reflecting some of the challenges and investor apprehensions surrounding its high valuation and increasing industry rivalry. Yet it's not all flags of caution. Analysts maintain a tempered optimism, with 42% recommending a buy and an average target price hovering around $294.27. No conversation about Tesla is complete without mentioning Cathie Wood and ARK Invest's bold projection, a long-term price target of $2,600. All eyes on Tesla's anticipated robotaxi breakthrough, which could dominate 88% of the company's value by 2029. As we edge closer to Tesla's earnings report on July 22, 2025, investors are leaning in with anticipation. With a steady EPS forecast of 31 cents for the upcoming quarter, the stakes are high, as this represents a modest adjustment from earlier predictions. If Tesla can navigate these headwinds, it might just reaffirm its electric allure. And that's the wrap on today's riveting ride through the markets and Tesla's latest. Remember, in investing, as in life, staying informed is half the race. Thanks for joining me on Tesla Stock Daily Drive. When the dust settles, only the truth remains. Till next time.